All right, here we go. We're live, and I see people are already making their way into the room. This is amazing. I think we might have hit a chord, Amber, David, hi, because I've seen quite a bit of chatter, and this, I don't want to say this is the year of the entrepreneur, but there was an article that came out just recently. I commented on it through LinkedIn, and it said it's happening right now that 4 out of 10 professionals on LinkedIn are going to be adding the word founder to their name because of how things are going, the instability in the job market and whatnot. 4 out of 10 professionals on LinkedIn. Do you understand that number? What that number is? What I see in that, and I know, I'm sorry, everyone, I just kind of just went right into it. I'm talking to the guests that are still trying to come in, but we're bantering a bit. But this is so crazy because that's what I've noticed, and maybe you guys have a take on it too, is, I work with a lot of small business owners, and I work with a lot of first-time business owners and entrepreneurs, and they're very good at their craft, but there's a huge gap in understanding the entire business and growing the business from finance to marketing to sales and all this. So there is going to be a huge need for knowledge and the implementation side of that knowledge to really help round them out and make them well-rounded entrepreneurs and business owners, because there's so much that, unfortunately, there's so much that you need to know. Does anybody, what do you think about that?
I mean, Jimmy, I couldn't agree more. I think we all work very closely with entrepreneurs, so we're seeing it firsthand, right? We're seeing people start more businesses. We're seeing people looking to scale their businesses to shift it to be their full-time income. And then we're seeing business owners who are, who once planted a seed 5, 10, 20 years ago, create these businesses that are now considered a legacy that, employ hundreds of people. And I think it's a beautiful thing to be able to see it from beginning to end, and to also be, have the ability to contribute to their success. It's really all about collaboration, right? Entrepreneurs shouldn't feel like they're on an island doing all of this alone. They should have a team. And I think we're all very proud to offer ourselves as a resource and talk about some of those things that they should be thinking about, so that they can continue to do that. David, I'm sure you agree too, right? With all the business owners that we serve every day.
Yeah, no, I was just going to add, and Jimmy, you started with, this is the year of the entrepreneur, and I think it is. We have a huge opportunity coming up with FIFA coming to the U.S., where a ton of tourism and capital is going to come to major cities all across the U.S. So I think when I talk to business owners, whether they're looking at this as an opportunity to upskill their business, go to the next level, this could be the one thing that could take their business to a whole other set of levels and success and doors. So I think it's all, I think this is.
Absolutely. Hi, you got anything you want to add to that, buddy?
Yeah, absolutely. I think, the beauty of being an entrepreneur is not only that gratification of taking your life into your own hands and your future and building something from what might be a niche skill set or an idea, but also being able to acknowledge that we have a network available, right? And that we can reach out to other individuals who also have specific skill sets and leverage them to our advantage, right? And that's why we're here.
Absolutely. And I'm excited for this. So just for everybody that's jumping in, we haven't started yet. We're just kind of giving another minute. So we're going to give another minute before we officially kick off the roadmap to capital. But when we think about these opportunities that we have available to us, the big thing becomes preparation. Someone says luck is when preparation meets opportunity. So that's great that these opportunities are presenting themselves, from the World Cup to, grant opportunities, and of course working with Bank of America or Merrill Lynch or organizations that really have things that can give the entrepreneur an upper leg. It's that preparation that makes that says you still have to have certain things in order. And we'll talk about that from a financial standpoint today, but you still have to do your due diligence to get yourself in a position to be able to take advantage of these opportunities, because if not, you miss it and it doesn't matter.
Yeah. 100%. Jimmy, I can't help but mention, right? We're talking about preparation. We're talking about opportunities. I think there are even more opportunities for those who are not entrepreneurs today, right? We think about all of the baby boomers who are approaching retirement and the millions of businesses that will either dissolve, right, or be passed on to the next generation. And so I would even mention all of the incredible opportunities that will be in their near future for those who maybe aren't entrepreneurs today, but could potentially acquire a business and become entrepreneurs, right? And that requires a certain level of preparation, because to your point, if you don't prepare now, you will miss the window to take advantage of those. So I think it's an incredible time to be an entrepreneur. It's an incredible time to prepare to be an entrepreneur. And what a perfect time to have this conversation today.
Absolutely. All right, so let's go ahead and officially kick this off. So for all those that are live, and of course all those that may be now watching this as a replay, we welcome you to what are we calling this? This is the roadmap to capital, and this month in particular happens to be a very important month. This is Financial Literacy Month, which is why I'm excited to work with and partner with Bank of America and Merrill Lynch to bring this conversation. Now, I am an expert, but I am not an expert in finance, which is why I'm excited to hang out with these incredibly fine people here today. And we have Amber and we have David, who are from Bank of America, and we have Hayek, who is from Merrill Lynch. And I'm going to give them a chance to introduce themselves in a second. But some key things we want to talk about and think about here are, we're going to talk about the 6 C's of credit. We're going to talk about the 5-3-2 rule. We're going to talk about choosing the right tools. And when I use the word tool, I use it differently. I think that the word tool is going to take a different meaning, because tools are not like hammers and nails and things like that. They're like access to portals and opportunities. These things can be tools. And then, of course, to access that capital like a pro. So this is going to be more of a conversation. We might pull up a slide or two just to prove a point, but the majority of what we want to do today is really around the conversation. And of course, for anybody that is showing up live, we have the chat, so please ask your questions. And if I can weave those questions in during the conversation, I will. If not, we'll leave a little bit of time at the end to answer any final questions. And of course, this is being recorded, so you will have all access to not only this recording, but the resources we do show. And I'll even pull together some resources that we mentioned. So on that replay, you'll get in 24 hours, you'll have a lot of things, and you'll be able to connect directly with Amber, David, and Haig as well. And of course, me, if you like me enough. I don't know. I'm not trying to say I'm all that, but I try my best. So real quick, just to give you an idea, if you're not familiar with my organization, Moving Forward Small Business, we're on a mission to save 1 million businesses from failure by 2050, leveraging innovation, technology, and strategy. We want to be that implementation arm that walks with you as an entrepreneur on your journey, not just educate you, but walk with you. And even, through our community-based programming, our group sessions that we do that are all part of our entire thing, we're taking this journey together. Every single month, we're doing 7 hours of group training every single month for the last 3 years. And that's going to go on until we can't do it anymore. So we're not sitting on the sideline. We can bark orders at you all day, but it doesn't matter if you're like, I don't know how to implement this. That's what we're here for. So I'm going to pull this slide down here and stop sharing, and let's get into this roadmap to finance. And so before we do that, I want everyone here to take a minute or so and introduce themselves. Tell us about, for Amber and David, a little bit about Bank of America, Haig, a little bit about Merrill Lynch, and then let's get into this conversation. So Amber, if you wouldn't mind starting first.
Sure, happy to. And thank you so much for having me, Jimmy. I'm excited to be here. So my name is Amber Rodriguez. I am a Vice President and Business Banking Relationship Manager at Bank of America. At Bank of America, in business banking particularly, we support small to mid-sized businesses with a full ecosystem of solutions, right? And we cater those needs, or rather those solutions to the needs of our clients. So the intent is to make sure that every business owner in our market can operate efficiently and that they can scale with confidence with a strategic partner by their side. And so I think of myself less as a banker and more as a strategic partner, not only to help them, our business owners, get access to capital, but to understand how to actually position themselves for it, for long-term growth. And so, David, I'll pass it along to you.
Awesome. Thank you, Amber. How do you follow that, right? Well, again, same thing. Thank you, Jamie, for having us here. Really appreciate the opportunity to be able to come and present and share our thoughts and, our inner tea on what lenders are looking for. Like Amber, I am also a business banking relationship manager with Bank of America. I've been with the firm for about 11 years, a total of about 19 in banking altogether. Like Amber, I support business owners from startup all the way to mid-sized companies. And the goal really is to be a truly trusted advisor, right? Sometimes that when I tell my clients is, I don't want you to call me when you need the loan. I want you to call me when you're thinking about growth. And that's really what differentiates us from everyone else across the industry. Is we really want to be trusted advisors. We want to be a sounding board. As businesses continue to grow, as they're continuing to expand, as they're thinking about expanding, and so on. So that's what I do.
Okay. And Haig.
Absolutely. So thank you, Jimmy. I appreciate it. My name is Haig Shahinian. I am a certified financial planner here at Merrill Lynch. I've been here about 3.5, 4 years now, and in the industry close to 7, 8 years. I guess a great way and a short way to explain Merrill Lynch is we get to act as a sounding board and the quarterback for your financial decisions in your personal life. Right. So whether or not that's sending your kid to college, how to do that, if that's potentially organizing a mortgage with David or Amber, if that's investing in a portfolio for your retirement, regardless of what it might be, we see that the fiscal world can be complicated. And we tend to, we make it into this mountain that's difficult to traverse. And really what our job, and myself, David, Amber, and Matthew, who's not here today, unfortunately, our job is to make that into a molehill.
Okay.
Right? Is to make it palatable, is to make it easy to understand, and to be able to be beneficial for not just you, but for your family as well.
Absolutely. So let's go ahead and kind of get in here real good. And I'm going to pose questions to each one of you, as I listen to what you're saying, but feel free to kind of feed off of each other as well and add key points. Because like you said, especially for David, you're talking about a startup founder up to a mid-sized company. That's a huge spectrum. Each one of those are massive. There's a huge subsection of each section that has different needs.
Yep.
And I'm sure that you're going to get into that, but I'm going to start with Amber. Let's start with the big picture. Sure. When we say access to capital, what does that actually look like for a business owner? And with your experience, this might be a tricky question, but what's the number one struggle they face when trying to unlock it? Because again, so I'm just going to open that up and let you start there.
Yeah, great question to kick us off. So I think first and foremost, when we think about or when we say access to capital, it's very easy to think of it as just getting approved for a loan, right? And I think it's much bigger than that. I think at the end of the day, when we're looking to and we're talking about access to capital, it's really about creating opportunity for a business owner. And that requires a certain level of preparation and readiness. So, your ability to secure the right type of funding, it could be a line of credit, it could be a term loan, it could be SBA financing or any alternative funding sources. But it's essentially a opportunity to use the bank's money or another financial institution's money to scale and grow your business, right? Now, the number one challenge that I see when it comes to entrepreneurs seeking financing is their, of course, readiness, but more importantly, to dig deeper into that, the behind the scenes of the business, the financials, the cash flow, the structure of the business. What we find is that business owners are working relentlessly hard to generate revenue, to increase sales, to market their business. And it feels and sounds like everything is going well, but behind the scenes, the structure is not in place in a way that a lender can support, right? And then I think on top of that, timing is an issue. So I think David alluded to this earlier, right? Bankers want to have a seat at the table when you're just thinking about growth, not when it's time to actually act on the growth. Why? Because we want to make sure that you're prepared so that when it's time to make the lending request, you've already checked off your checklist. And you've already had the banker as a sounding board to let you know that you are well positioned, rather than when it's a sense of urgency, when you are maybe low on cash or you may miss payroll, and that's when you need the cash, right? I think it's important to get ahead of those times by requesting capital when you don't need it. And I think that sounds odd, right? In a sense, but really, if you don't need it, it's because the cash is there, the cash flow is there, and you are growing in a strategic and a significant way. That is the right time to ask for capital. So certainly timing, I think, is one of the biggest challenges that I find entrepreneurs face when they do come and ask for capital. David, I'm not sure. Do you see anything differently in your conversations at all?
No. I think, the key to success is preparation, like you say.
Certainly.
And sadly enough, I see oftentimes where clients are looking to finance an opportunity and they're at the 11th hour, right? Mm-hmm. So when Amber says you should find access to capital when you most qualify for it as opposed to when you need it, it's probably the smartest choice to do, because when you're in that 11th hour, there's probably it's a reaction to something that has happened in your business and your finances, and now you need the capital. So it's always good to have it when you don't need it, because when you do need it, it's already established in place. Aside from that, that's when we as bankers, when we don't want to be bankers, we want to be trusted advisors, right? Because these conversations need to happen with clients. And then when we say startup to mid-size, we need to talk to the client specifically when they're planning for a year, 2 years, 5 years down the road, because things like this happen, right? There are dips in market, there are, up markets. There's just too much volatility going around for a client not to be prepared and having the right things in place, the right capital, the right financing, the right funds to be able to finance a project that could just drop on your lap, right?
Absolutely.
You may need to do something like that. Yeah.
Mm-hmm.
So I'm going to jump in here as well. I think David hit the nose on the head there. It's about being prepared, right? So that's effectively what we do at Merrill Lynch as well, is developing a plan ahead of time, taking into consideration the volatility of the market, how our lives will personally change and how the market changes around us, and being prepared and having made the decisions already to know that we can weather the storm. So again, I just want to reiterate, it's about having the wherewithal to understand our own limitations and to reach out and to expand beyond and to be prepared for things we might not see coming, good or bad.
Yeah, and so this makes me think. So I know we chatted a little bit before, even before this call, and this whole thing about needing, determining that that I won't get a loan before I actually need it. Two things come to mind to me for a lot of entrepreneurs. This could be a scary situation when we're talking about financing and taking loans out and money out when we don't need it. And two, I'm a strategist. So, part of what we do is helping businesses, build a 12, 18, 24-month plan and going all the way up to a 5 to 10 years overall strategy, not just an annual plan. So now what I'm hearing here is when we're doing our annual planning and we're focusing on our marketing objectives and our growth strategy, we should be including in that a conversation with someone in the finance side of things to go, well, how does this fit into our strategy? Because I can see this now from a standpoint of, okay, I got my 12-month plan here. And I'm on day one of the 12-month plan. I know where I want to be in 12 months, but none of that includes finance. It's just finance will be the result, the winning, one of the key KPIs at the end of the 12 months. But if I was to have a conversation with you during this time, I could be planning for maybe a growth strategy, a growth intake of funding at that 12 month because I did everything right. But if I never talked to you, maybe I didn't know. So when I got there and I thought I was in good standing, I'm actually not, or I'm not as prepared as I thought I was.
Yeah, and Jimmy, just to add to that, a part of what we do as bankers, for example, Amber and I collect financials probably 3 times a week, if that, or more. So what I like to do sometimes with clients also is, for example, you tell me I have this project. I have the capability of grabbing 5 to 10 companies within the same industry, same revenue size, and say, listen, if you have this plan, these companies have been successful without obviously disclosing any proprietary information, but say, this is what they focused in. This is what they want to do. And maybe you can adjust your plan according to that, right? So it's a profile amongst a group of companies within that same industry, same revenue size. And then what are they focusing on? What are they investing on? What are they pulling back on? So that you can also build your strategy around that as well.
Yeah, I love that because it's actually making me think now in real time. Like I'm thinking for moving forward, small business. So I'll use myself as an example. We've got a really robust and pretty aggressive 12-month strategy, but next year we want to launch a 10-city tour. And for the first time, I'm thinking, why shouldn't I be communicating with someone on the finance side of things to at that point, I could use the money that we're generating in the company, but is there a better way to use a third-party source of funding for that tour, keeping more cash flow into the business? And I'm just talking, because again, I'm not a finance guy, so you could be like, oh, Jimmy, none of that made any sense. And my feelings don't get hurt because I'm from New York, so...
No, but you're exactly right, Jimmy, right? You are 12, 24 months ahead. That is the time to have those conversations with your financial strategic partner and let them know, this is what I'm looking to do. These are all the different components that are contributing to make this possible. Tell me, are there any solutions that come to mind that you think would be able to contribute to this bigger picture? And I think 9 times out of 10, with how vast our financial ecosystem is, there is a solution out there that will help support that. It's just a matter of having that right person that will help you, guide amongst the overwhelming abundance of resources that are out there, narrowing it down to what makes sense for you and your business.
Absolutely. So I have so Nikisha on here says great question. So she liked our first question. So that's a good plus. That's a plus on our side.
That's great.
And then we have Jack, and I know Nikisha and Jack. So shout out to both of them. Jack says, how does a small to medium sized business owner develop a relationship with the bank at the beginning, a new owner may be successful making money and moving along. Then they look to expand, maybe another location. How do they stay close to the bank all along so the expansion request is not a surprise to the bank?
Great question, Chad. I'll kick it off, and then David, I would love your thoughts. I think the first thing that comes to mind is to keep your banker in the loop. If you have an idea, a spark of an idea, tell your banker about it. I'm sure they would love to help you bring that to life, and get ahead of that as early as possible. So when you think about developing a relationship with a bank, it's the same as developing a relationship with anybody else. Pick up the phone, have coffee, meet for lunch, right? We're all people at the end of the day. And I think people enjoy working with people who they trust and enjoy working with. So I think the more that you pour into that relationship, the stronger it will get. And on the banker side, right, the better that we know you, your values, your purpose, what you're doing all of this for, the better we can serve you, right? And the better that we can meet your needs in a way that makes sense for you. So it's really all about having that consistent communication. I think on a banker side, we try to, at the very least, meet with our clients twice a year, but that really tends to be on a monthly basis, normally, especially when a business is in growth mode. And it's really all about being honest, keeping that open dialogue, and really putting it all out there. The more we know, the more that we can help you. What do you think, Dave?
Yeah, and I'm sorry, my thing keeps going in and out, so I apologize if you guys see me pop in and out. I might have to log in from my phone in a little bit. But to add to Amber's point, it is a relationship-based business. So my advice is, if you're talking to someone and they're trying to be more transactional and say, what can I sell you today, or what can you do, or how can I help you today, in terms of like booking, whether it's a credit card, loan, whatever the case is, and they're not really taking the time to be strategic about your growth, your plans, your 5-year plan, or how your operations work within the company, right? If they're not really taking care into that, then you're talking to the wrong banker.
Yep.
Because they're just being bankers, they're not really being trusted advisors. But I couldn't have said it better. Keep your banker in the loop, talk about it. And we're like the quarterbacks of the relationship. So Ember and I are the front lines meeting clients, but we have a whole team of experts behind us on different subjects, different industries, where we can introduce you and say, hey, listen, you have this plan. It's worth a conversation with this person. You know what I mean? So we bring in people as we need.
And so does the personal side of things play into this this conversation? How does that, because I know you're dealing on the personal side. So and I know less about Merrill Lynch than I do about Bank of America. So this is even me trying to figure out, where does that piece fit in? Is it, because when I think Merrill Lynch, I think high net worth individual. I hope to be one day. I'm still working on it. Is that a situation where they have to get to a stage before they make that transition, or can they engage you a lot earlier in this whole process?
So, that's a great question. They can absolutely engage us much earlier. We have several different sects of Merrill Lynch that specifically focus on different client levels, right? So while the Merrill Lynch brand might be intimidating, I assure you we're much cushier than you think.
Yeah, and I don't mean that at all in a bad way. We're just, it is in a way that we feel excited to want to do it, but we feel like we have to come to the table already at a certain level of success. Let me just say it that way. So I think it's more on us than it is on you.
Well, I'm happy to say that we absolutely do have programs for individuals who are not necessarily at that level of affluence yet, but are getting there, right? So individuals, investing in general can be incredibly intimidating just because there's so many factors that go into it. So just getting started, frankly, is half the battle, right? Just contributing a dollar, and let's call it $100 a week for whatever your pay is, right? That already is a huge leap forward, because that's you saving and that's you actively making a decision to invest in your future, the same way you would with your business, right? And so what I want to relate is that your personal wealth in many situations is not separate from your business's wealth. Right? Let's think about how many businesses get started. You're probably working a 9 to 5. You saved up, $2. You put them in the shelf. You gave them their room and turned on the lights, and ideally a few more popped up. Right? And so that's the funds that you got to use to go in and start your business and to really accelerate your idea. And so it's that same methodology there that we would use here. And so, while things may appear complicated, we know that if one diligently saves, if one has an idea, if one is determined, they're going to get there. And so the idea behind what we do, and especially on my side, is we look at money in really 3 different time frames. The immediate time frame, which is typically 0 to 2 years, which is a significant amount of liquidity. Our 2 to 10 years, so let's call that balanced growth, where we can go and take more risk because we have that extended runway in front of us. And then let's call it our significant growth, right? This is our 10 plus years. So we're looking at each of these time horizons. We're assessing what goals you have. We're quantifying how to break that down, where that fits, and the amount of risk we have to take versus the amount of risk that we can minimize in order to achieve those goals. So again, I hope that answers the question. I think more often than not, we do a little mental accounting and we separate our business from our personal finances. But, as the son of entrepreneurs myself, I can say that the two are very much intertwined.
Absolutely, especially at the earlier stages too, probably for the small business. So, so let's get deeper into structure and strategy. So I want to pivot a little bit, and I think this next pivot is really going to be the crux of what we're really here today for. And so, Amber, I'm going to come back to you, and you have this thing about the 6 C's of credit, and I'm assuming this is the access part of capital, if I'm correct.
Yeah.
So
100%.
So let's get into what are the 6 C's of credit, and how does this play into this whole thing to get us that capital that we need.
Yeah, so the 6 C's of credit is like a rule of thumb that lenders use to assess a business's financial identity. And that's really what business credit is a business's financial identity. It's how lenders are able to evaluate a business's and a business owner's ability to manage and repay financial obligations. So, your revenue can tell a story about where you are today, but your credit is going to tell a story about how you actually manage that responsibility over time. And that's where these 6 C's of capital come into play, right? So the first 2 that I'll mention that tend to be overlooked are character and communication, right? Okay. So when lenders evaluate a business, of course, we're going to look at the numbers, right? We're a financial institution. So we're going to look at revenue. We're going to look at cash flow. We're going to look at debt levels. But we're also looking to evaluate the person behind the scenes, right? The person who's making it all happen. And that's where that relationship with the business banker comes into play. The more they know you, the more that trust they have in you, and the more they understand how strategic you are in your business strategy, the more likely we are going to be able to advocate for you internally when it's time to support a lending request. So your character really speaks to the consistency of who you are as a trusted business owner, and essentially the way that you are able to build trust with your financial institution. So if you're overdrawn on your bank accounts and maybe you're late on credit card payments, we're going to see that, and it's going to cause some red flags. So character goes a very long way, and it tends to be where we first start off, right? Even being able to thoughtfully articulate the way that you are presenting a lending request. If we ask for, or if a business owner comes comes and asks us for $100,000, and we ask, well, what is this money going to be used for? And maybe the business owner is fumbling over the words and doesn't really have an answer. Another red flag. We want to make sure that we're communicating this very, very clearly and articulating the need, because that's going to help us better serve you. So, of course, listen, we don't expect business owners to be experts, right? In financial acumen and business acumen. You know, a lot of business owners tend to be exceptionally skilled at one thing, and then they create a business around it. What we want to understand is, are you being proactive in growing your business? Are you being transparent, right, in the conversations that you're having with us? And are you thinking strategically about how you're going to find solutions to help you get your business to where you are? And even to extend that, are you thinking strategically about how you're going to grow revenue to be able to repay this debt obligation that you're looking to achieve? So I think character and communication is where it starts. And then we get into like the nitty gritty of it. So I don't want to steal the show here. David, please feel free to chime in with the other 6 C's.
And I pulled this slide up for everyone. This is part of a bigger deck that we'll be sharing with everyone with the replay. So this is only one slide that you're seeing here, but I think it's good. Some people like to see this here so they can ingest it as, you know, Amber, David, and Heike are talking.
Yeah, visual learners are always a thing. I'm a visual learner as well myself. So to continue, so I'm going to maybe touch a little bit on capacity and conditions, and I'll keep it very simple, because there are things that owners usually recognize right away, right? So one of the signs, for example, that we have that comes up as maybe as a red flag when we're looking at the 6 C's of capital is obviously cash flow, right? So is it all over the place? Are good months followed by really tight ones without any clear reason? Are lenders looking for perfection, or do we want consistency? Another red flag that we look at is when most of the cash that is coming in is already spoken for. So, for example, rent, payroll, existing debt. So there's not really much flexibility to take on any more debt. And then the third one that I would say is the most common one is working capital inefficiencies. Like slow collections, expenses growing faster than the money coming in. Those are all signals of that operations need to be tightened before any more new debt can be acquired. When I sit down and I'm looking over financials for a client, I literally have this specific slide on my computer, and I'm looking at it and I go, capacity, check, capital, collateral, conditions, character, communications. We want to hear the whole story. We want to put the whole story together. That's why it's important to engage your banker from the get-go, because how are they going to know your character without getting to know you as a person, right? And that's not going to come from one meeting. It's going to come from several meetings. What capacity do they want? What projects do they have? Is there a big project coming in that's going to inject a huge amount of capital into the business, right? How is that going to be funded? It's really important to know all of these, and then know as the borrower how are you going to be in a way measured, graded, as you wish to call it, and that's really what's going to put everything into place as you move forward, or you're trying to gain more access to capital or funding.
Sure. So there's definitely a lot to think about as a business owner when we're doing this, and there's a lot of things that we need to be doing. Like you said, Amber, we're good at the thing that started the business. Now we have to start to build the rest of the house around, this chair that now sits in the middle of the entire house here. We have quite a few questions, so people want to know some stuff. So I'm going to break from our regularly scheduled program, and we're going to take a look over here. And I'm going to start with Lisa here. Lisa's in the house. Lisa Rattel, how you doing? She asked, if a startup goes into some debt after investing into building a business, should the startup wait until they get out of the red before pursuing capital?
I'll take this one if you don't mind.
Please.
So I think when that happens, right? And I would say the perfect client for me is someone that takes feedback and it's not offended about the feedback, right? We always have to be open to a third party or a third party, commentary or feedback in that sense. And I've actually had clients that have been in the red and they want to continue to grow. But when you really take a step back, right, and you take a look and you identify that one thing that got you to the red, how do you fix it? And it doesn't necessarily have to be income flow. It could be your operations, could be money walking out the back door, could be fees that you're paying that you don't need to pay, could be, are you over leveraged? Are you, what are you paying? Can you combine two jobs into one? So instead of having a CFO, bookkeeper, this and that, can you reduce your staff? When we really want to take a look at what that thing was, what that trigger was that took your business to the red, and really be able to fix that operation, in order to move forward. Amber, do you have anything to add to that?
No, I think that was perfectly well said. No notes.
Okay. So let's move over to Corey. And he asked, are there any restrictions or limitations on how businesses can use capital through your institution? So I'm assuming Bank of America, for example, allocations towards marketing and advertising, payroll expenses, real estate investments, or other operational purposes.
That's a great question. I'll take that one. So the answer is it depends on the type of capital that you're using. Not all capital is created equal, and not every solution is made for everything. So some of the examples that you mentioned, and who asked that question? Is it Corey?
It was Corey.
Corey asked? So, Corey, some of the options that you provided, right? Marketing and advertising, payroll expenses. Those are some of the day-to-day operational needs that are perfect for a business line of credit or a business credit card, for example. But let's just say you are looking to purchase real estate. Maybe it's time to own rather than rent. You would not use a line of credit in order to purchase a real estate property, right? That's where commercial real estate financing comes into play. And let's say one day you were to get a real estate loan and they see that you're using it to purchase equipment, that may cause a red flag. So it really depends on what you're looking to use the funds for and making sure that you have the right solution in order to do that. If it's equipment that you're looking to purchase, then you would pursue equipment financing. And this is why I say it's such a vast ecosystem of solutions that are out there. It's actually very surprising to know how specific some of these solutions are for specific needs. So hopefully that answers your questions. It really depends on the capital that you're using, and having that communication with your banker up front and letting them know what the use of funds are for will help narrow down the options so that when you do get the access to capital, you're using it appropriately.
Okay, I'm going to do one more question, then we're going to jump into my next question. So Christian says, how could businesses communicate to their clients to ask what they need to sell for their business inventory for profit? So I'm not fully sure if I understand that, but I'll say it again. How could businesses communicate to their clients to ask what they need to sell for their business inventory for profit? Maybe we need to sit on that.
Yeah, I mean, I would love to have that question clarified. What I'm receiving is, how do we ask clients what they want to buy? And I'm not sure if that's what the question is, identifying the need with our clients.
Yeah. So Christian,
maybe
you
we get some clarity
clarify
there
that a little bit for us. And then I'm going to go back in, and then Jack has another question. So I want to get back to his question.
Perfect.
But I want to turn to David for a second. You have this thing about the 5-3-2 rule. And I guess that's around being capital ready. Right. So can you dive a little bit into that 5-3-2 rule that you have, and what does that mean for preparation?
So basically the 5-3-2 rule is your profile as a borrower, I want to say. And it might be to a shock to many, but there is an actual credit score and report that is attached to every business, just like we have it with our Social Security and our personal. So, and then the three bureaus that most banks use is DNB, Dun & Bradstreet. We use Experian for business and also Equifax for business. So what we really want to think about the 532 rule is you want to have at least 5 active trade accounts, meaning operating accounts. Why do we do this? It really goes to show your organization as a business owner. So for example, I have clients that have an account for payroll, they have an account for merchant, and have an account for ACH payments, and so on, right? So you want to have at least 5, if not 5, then at least 3 or 4, I would say, in good standing, good history throughout the whole tenure of your relationship with the bank. You want to have 3 different types of credit, right? I know it says 3 business credit cards, but it's really 3 different types of credit. So lenders can see how you've managed more than just one kind. So same concept. In your personal, we want to take a look and see, you want to have a credit card, an auto loan, and a mortgage, right? Those are that means you're diversified. You're really leveraging yourself in a smart way and in a wise way to go forward. So the same thing in the business. We want to know that you have a working capital line, whether you have equipment finance, you finance your business. You're using you're going to have 3 types of different loans, and the reason for that is also, and it kind of goes back to the question that was just asked, like, are we strict with the use of proceeds for each line? And the reason for that is because when you educate yourself, and just to give an example, equipment finance now, it's 100% tax deductible. It's a huge tax benefit. So you're not going to want to use your working capital line of credit that has a prime plus to use working capital, and then you can't deduct it on your taxes. We want to know that you're using the right loans for the right things, and that you're being smart about it and wise about it. And then the last one is 2 loans paid in full, but it's really, we want to see at least 2 years of consistent payment, right, on your current loans, your working capital line of credit. So just to put it into perspective and to give some context, you may if your working capital line of credit is $1 million or $500,000 and it's always maxed out, you're not using that line of credit appropriately, right? What we want to see in the working capital line of credit is like a wave, like a roller coaster. You want to use it to fund your projects. You want to use it to fund what you're really looking to. When you're really looking to collect that money, you're looking to repay it back. So we want to see ups and downs, ups and downs. There really should never be a balance forward month to month, 300,000, 100,000 month to month. That should be paid off and paid back and then racked back up. Credit cards. What do you use credit cards for? Most people use it for rewards. So that's also kind of like in the same concept, working line of credit, right? A lot of the times, and I just had a conversation with a client, he went into a loan that was interest only. And when I was asking him, why is this loan interest only? When we get the full picture, he was in a bind. It was the only bank that approved him. He had to get an interest only loan. So when we look at that, we say, how long have you been in business? How have you managed your business that you had to go in that your only option was an interest only payment loan? I was just saying that's when we look at it. It really goes binded to character. It goes binded to your operations, how you run your business, and so on. So that's why we want to see 532, because we want to see diversification across the whole operations of your business, how you handle your business, and that's really going to give it. And it really ties to the 6 C's, and all of them. As I'm looking at them, 532 will give us the ability to see your capacity, your capital, your collateral, conditions, character, communication. It goes all tied together.
And again, this makes me just come back to think about how this is more of a strategic planning thing, even though we're using the word finance, and to really be able to, again, to control that up and down thing and manage it, especially if it's got to be over a 2-year period of time, So there's a lot more under the hood to kind of think about this in a long-term strategy format. And then now that financial partner, planner, partner, whoever, really does play a much more important role in your growth journey, like you started off before saying, Amber. So this, and again, this starts to open up the door to us being better planners overall. And the better we are at planning, the better we are at the success we're going to get. And making sure we're keeping those communication lines open to everybody that needs to know what is going on around here.
Yeah.
So this
and the more options you have, right, Jimmy? So we're not getting interest only loans.
Absolutely.
We have options
because they are at that point in that fight or flight mode. They're
Correct.
At this point it's like, well, whatever we can take, and that's how you end up in these bad situations that just don't make any sense to anybody other than the person that made the deal until they tell you why they made the deal. So, wow. I mean, we're getting close to the end. So I'm going to try. So Christian came up with reformatted his questions, and I want to get Jack's question in. So Christian says, how could businesses communicate with their clients to maximize profit? So I think that's more of a marketing and sales thing than it is a finance thing.
I would agree. Yeah, how you market how you show the value to your product, right? How you sell that across. Do you sell the product or do you sell the value? How are you engaged in social media? So I would say it's more like a marketing piece, but it's really how you showcase your product.
Yeah.
And the value. It's easier to sell value than to sell product, to be honest with you.
Absolutely.
It's true. And it's easier to sell a solution or a product when you're solving a problem. So I would even lean into what problem are you solving? What outcome are you trying to deliver? And why it matters to your client. And I think if you're able to communicate that to your client, it creates a need that it's hard to say no to.
Absolutely. All right. So let's get back to Jack. He was our first question. And he says, if a business has a checking or a deposit relationship, who do they seek to develop the broader relationship?
Great question.
Jack by the way, Jack is sharp. So that's why he's
can see.
And I'm not saying all my people here I'm seeing here are sharp, but Jack's no joke.
No, that's a great question. I think, if you have like a personal relationship with a bank, right? The first thing that you could probably do to figure out who the right business banker would be in this example is to go to the branch. At Bank of America, we call them financial centers. So for the sake of this conversation, I'll call them a financial center. I would go to the financial center. I would say, listen, I've been a personal client of yours for this long. I have a business, and I'm looking to grow and be more strategic in the decisions that I make. Do you have a business banker or a business banking specialist who either sits here or covers this market that you could introduce me to? And I promise you they have somebody in mind already. At Bank of America, every financial center has a business banker aligned to it. So that would be the great and probably the best place to start. But then, we have resources like LinkedIn and all these different online resources where you can Google and find somebody as well. I always like to start local though. Right? David and I'm sure we can agree that we serve the communities that we live, work, and play in. And what better way than to have a business banker that you can actually, meet with for lunch and coffee. I think that's always the best way to build a relationship.
Okay. Now we're kind of at the top of the hour. We got about 5 minutes left. So, I love the conversation. And again, I feel like we're still only scratched the surface because there's so much that we can talk about. So my last question to all three of you is, is there something that I didn't ask you or we didn't hear in the chat that you think is important to kind of prepare people because we're in Financial Literacy Month? Is there a message or a key thing that everyone should take away?
I'll kick us off here. And I think we kind of talked about this throughout the whole conversation today. But what I would say is to shift the mindset a little bit when it comes to the concept of access to capital, and think less of it as a transaction and more of it as a strategy, right? So when you're making your 6-month, 12-month, 24-month plan, make sure that you're also preparing, or more so positioning yourself for requesting access to capital, and being strategic in how you would use that access to capital so that you can grow, you can scale, and you don't necessarily have to tap into your own cash flow in order to do so. It starts early. It starts from the beginning. And I think when you plant those seeds early, it tends to come to fruition. And if you have the right team around you, you're just increasing your odds of being successful.
Absolutely.
Yeah, I'll just add to that. I think it's important. I think the main thing is, I mean, at the end of the day, we don't know what we don't know, right?
Right.
So surrounding yourself by the right advisors, just like the question, how do you get in touch with the business banker? We didn't touch today on CDFIs, grants,
right.
things that the SBA. There are so many avenues that you can inject capital into your business. That doesn't necessarily always mean financing. It could be other things. When it comes to that, I would say be open to meeting with a business banker advisor and say, hey, this is my land right now. How can I go forward, right? And then just be open to that feedback, right? It's not always a no, but it may be, how about in 6 months once we fix this and that, right? And that's just the only thing that I want to leave everybody with. It's just surround yourself with someone that is in the industry, that has the ability, the resources to be able to bring that advice to you as the business owner.
Hi, any final thoughts from you?
Yeah, I mean, again, David and Amber have been incredible today, and as well as you, Jimmy. It's been a pleasure to be here, and I would think my closing statement, I would say, is that don't be afraid to ask for help. Like David said earlier, we don't know what we don't know. There's a reason why we employ lawyers. There's a reason why we employ CPAs. There's a reason why we employ bankers and certified financial planners and individuals like yourself who have a deep knowledge within AI and integrating that within businesses, right? What we can do is don't be afraid to ask questions. Don't be afraid to explore. And it's okay to be wrong. It's not okay to stay wrong.
Wow. Mm-hmm. Yes, absolutely. I love that. That is a serious line right there. And
I'm taking that one,
Hyde. Yeah, we definitely putting that on some t-shirts. So, and with a picture of Hyde, like that, just head turned. I want the head turned, and I want people to be like, what? Okay. But the funny thing is, Jack said something that I was going to bring up, but I didn't. But since he said it, I now want to say it. He goes, we do so much of our banking online. I think business owners need to resist that a bit and ask, do I have a relationship with my bank? And I have a personal relationship with that because I am a digital person. And when you are doing most of your stuff online, you don't get that opportunity to build that relationship. And so I'm starting to question that comfort over the relationship that I should be building that I am now not building. And a year later, I still don't have that relationship. Does anybody want to step in on that? Because I wasn't going to open that can of worm, but since Jack did it, he opened it. I'm just gonna eat a little from it.
It's an incredible point, and I won't spend too much time on it, but I will say it's true. We live in a digital age. We can do 90% of our work online. But when it comes to those larger requests, right, asking a bank for $100,000, they want to know who's behind that screen, and what better way of doing that than already having a trusted advisor in the bank that can advocate for you, and educate you as well as to what lenders are looking for. So, yeah, yes, I would say maybe my final call to action here really is, if you don't have a personal relationship with a banker, go out there and find one and build that relationship now. It's never too late to start.
Yeah, I'm gonna say Bank of America. So at the end of the day, I want to thank you all. Michelle says, thank you, wonderful session. Lisa says, great session. Christian said, thanks for the great help. So he appreciated it. Corey, great example. So everybody here, they're very happy with what has went on.
Great.
So, and you'll get this replay. You'll get all of their contact information. I believe I also have links to certain places where you can visit, where they give you more insight on what, David, Amber, Haig, and our other colleague who couldn't make it, Matthew, I'll still have his stuff there. So definitely connect. Think about this now more as a strategy than just a finance thing. Because it definitely opened my eyes as we're looking at things, the aspirations of our organization. We have a annual 5-year, I even have up to a 25-year plan. And so now this is really making me really think to go, I really haven't given that much thought to the actual financial relationship that would help fuel this, not based on the money I need right now, but the money I might need in a year if I accomplish those goals. And to keep to keep that flow is, and then that whole thing with David here, looking at that, going, okay, then now I have better advice to go. Why should I pay this off now? Why should I keep this where I might say, no, I'm not going to do that. I'm just going to keep the money. So I want to thank you all, and for everyone else, again, you're going to get that. I'll say one final thing for us, we're going to be doing next week. I'm going to be partnering with Nikisha Wilson and Corey, and we're going to be doing a behind the bookkeeping, how to get caught up in a week. And, we're in the middle of tax season on top of this, so taxes need to be done. So
very important.
Think about that. So there'll be a link on that for that. But all of these things are hyper tied together. And I say the biggest lesson I think I'm taking from this is, everything that we need to lift the silos for the business owner to go. Finance and marketing and sales and HR are not independent standing things. They are an ecosystem that needs to work collectively together, and you have to share data because that helps the entire ship stay afloat.
100%. 100%. Build the team out now, your trusted advisors, execute the plan. It's the best thing you could do for yourself and your business.
Beautiful. So again, I thank you all, and I thank you all for showing up. Revisit this webinar, watch it 2 or 3 times if you need to. And as Amber said, connect with someone, start building that relationship. And from my standpoint, start integrating that into your overall, your annual strategy and your overall strategic plan in general. So we thank you.
Absolutely.
We have a saying at Moving Forward Small Business. For any of you that have ever watched The Mandalorian, we have our Mandalorian saying, and it goes, stay active, stay focused, stay strong. That is the Moving Forward Small Business way. So with that being said, we bid you farewell for the evening, and we look forward to seeing you all on another webinar or chat soon. Take care.
Take care. Thank you.
Take care, everyone. Thank you.